There's a lot for us to talk about. I'm going to get to Rockefeller in a minute. I mentioned that people know you best for your role as president of asset and wealth management at Morgan Stanley. However, more recently, you've been advising Derek Jeter in his capacity as co-owner of the Miami Marlins.
Yes.
And that team has been raising eyebrows, let's say, in New York, particularly with the trade of Giancarlo Stanton. But there's, D. Gordon's gone to the Mariners and Marcell Ozuna has gone to the Cards. The big question in people's mind, I think, is how much lower can that team chip the payroll down? Can they get to that $55 million figure?
Well, I think that what Derek is doing, and he, by the way, has the full support, Erik, of the ownership group.
Bruce Sherman and company?
Bruce Sherman, the others. There's 5 members of the board. Bruce Sherman's one of them, with Derek Jeter and 3 other terrific guys. They all are supportive of Derek as he's starting to implement the strategy now. So you need a team that's on a sound financial basis. He wants to invest in younger players in the farm system and build an organization that's going to be great over the long term. So it's not, Miami's gone through some changes from a baseball standpoint where there's been investment and then disinvestment. Here, we're setting it up, and Derek's setting it up to invest for the long run. He's not going to do this now and then again later. He's going to build a great organization bottom up. And the way to do that is to invest in younger players, invest in the farm system, make sure it's financially stable. So this is all part of the strategy that we talked about and that Derek's been clear on from the start.
Does that mean, though, that he's going to be dumping more high salaries in an effort to chip that payroll number down?
I think, hard for me to comment on specific players or where the payroll is now versus where it's going. But to be clear, it's not just about cutting payroll. We're investing, and Derek wants to invest in the farm system and building an organization that can be great over a 20-year period. Derek's a young man. He's CEO of the whole organization. He's in his early 40s, and he wants to lead this and do it well for a long period of time. So it's not just about getting rid of payroll. It's about reducing payroll. Remember, the team didn't do very well last year with the players that were there. So he's repositioning the payroll to create long-term success.
Where do talks stand on raising more capital, bringing other investors into this ownership group?
There's a process going on where we're raising more capital to broaden the ownership base a little bit. But the team is very well capitalized today. The ownership group is comfortable with where it is. In order to get the deal done, some people stepped up a little bit so we could get it over the finish line and buy the team. So we're out talking to additional investors to bring in some other people who might be additive in other ways, who might bring different relationships and different ideas to the table, and to allow the existing ownership group to take a little bit of capital off the table. But it's not something where we need additional capital from the outside. We're just raising additional capital to broaden the ownership group in a way that we think makes sense for the long term as well. So that's what's ongoing now.
Because Bruce Sherman and possibly others would like to own a little bit less.
A little bit less. But again, if it stays where it is today, they're good. They're comfortable with where they are and where the team is going. But that's the whole notion, a little bit less. And also, Erik, you can bring in some additional owners who might have experience in a different sport, might bring something strategic to the table, and that's one of the thoughts that we have.
I want to ask you a few questions about Rockefeller Capital Management, Greg. Are you trying to build an asset manager, a family office, an investment bank, a little bit of all three, or what?
Well, what we're trying to do with Rockefeller, and the name of the company today is Rockefeller & Co., which is a tremendous name. We're going to rebrand it Rockefeller Capital Management to make it clear that we're in the business of advising other people on their money. And we're trying to put together, Erik, the 3 businesses that we think are very synergistic: wealth management, asset management, and I like to say strategic advisory, but investment banking advice. So those will be the businesses that we're in. And Erik, the only firms that really have all 3 of those businesses in the same organization are the big public firms. Most of the private firms are in one business or another. Very few bring all 3 of those businesses to the table in a synergistic way that we think we can.
So you've conveniently led me to my next question. I want to get a sense of your ambitions. If there were a firm today that you would compare Rockefeller to 5 years from now, what is it?
That's one of the great things about where we are. I'm not sure that there's a firm that has the mix of businesses that we have today. I've actually been saying there isn't.
Well, Morgan Stanley has it, but clearly you're not going to be as big as Morgan Stanley.
No, we're not going to be as big as any of the big major firms, the big public firms that are bringing a scale that we're not going to try to bring. But we are going to, within Rockefeller Capital Management, if I can just tell you the 4 businesses, we're going to have Rockefeller Global Family Office, which is wealth management for very high-end families, including the Rockefeller family. Rockefeller Wealth Management, which would be wealth management for high net worth individuals, as distinct from ultra high net worth. Rockefeller Asset Management, we've got some great proprietary strategies led by a guy named David Harris today. And then Rockefeller Strategic Advisory, which would be investment banking advice for some corporations and also for those ultra high net worth families. Those are our businesses.
So some people might say Wall Street doesn't exactly need another firm. And furthermore, it doesn't roll out the red carpet for new competitors. How hard is this going to be?
You know, I think you start with the name, the Rockefeller name, and it is a great cross-generational name, and it can open doors anywhere in this country and frankly around the world. So that differentiates this
like the
firm
Rothschild
right away.
name?
Rothschild's a great name too. And as a matter of fact, we have Rockefeller's got some relationships with the Rothschild family, and we're likely to joint venture with them in places like Asia. But in terms of whether you need another firm like this, the advice component, the trust component, the fact that it's a private firm that's focused only on these businesses, you know, minimal conflicts. We're not putting capital to work, we're just providing advice. So our strategic advisor, our investment banker who goes to work with the ultra high net worth family, they'll know that they're getting unbiased advice because they're already a client. So we don't think there's a lot of models like that around.
So as part of this rebuilding, you're being recapitalized effectively by a hedge fund management firm, right?
Their private equity arm, yes, but it's they started as a long-short fund, but they've got a $4 billion private equity portfolio, and that's the entity through which the capital comes.
So how much rope? Andreas Halvorsen is a notoriously tough guy to work for. How much rope is he giving you?
He's also very successful in what he's done in his career. And he and his colleagues, David Ott, Brian Kaufman, they're smart, they're strategic, they like the sector. They came to me after I left Morgan Stanley and said, let's find something in wealth management that we can invest in together and that you can lead. So, you know, he's going to be focused on us growing the firm and being successful. But that's that's okay. That's, you know, he's got LP money that he's responsible for. But I think they'll be great partners. And I think, you know, that's a great organization, and they've been successful in everything they've done over time. And with them, we expect to be successful here.
So a big part of what you're building is wealth management. That's
Yes.
Also what you did most recently when you were at Morgan Stanley. That's an industry, as you know, Greg, that appears ripe for disruption by robo-advisors, right, by index products, by the fiduciary standard. Is the financial advisor a dead man walking?
To the contrary. I think all of the things that you listed, technology is changing the world, by the way, for this industry and every industry. But what the robo-advisors bring is a set of capabilities, and you need to have those capabilities. So a financial advisor or independent financial planner, wherever they are, they have to have those capabilities. But the human interaction, the advice component that the financial advisor, the client advisor brings to the family, to the individual is a very, very important part of this business. And I think we'll be there for the long run.
What can you charge for it?
If you're providing good advice across the full breadth of needs of a family or an individual client, where you're giving them advice on generational wealth transfer, trust work, you're helping them with their liabilities, mortgage, you're borrowing against illiquid assets. If you provide full comprehensive advice and you're reliable and trusted and you're doing it under the name Rockefeller Capital Management, they're happy to pay you fairly.
You're going to be competing with some of the biggest firms in the business, some of which you know very well. Merrill Lynch, now part of Bank of America, Morgan Stanley, where you came from. If you looked at those firms today,
Greg.
Merrill,
too, don't forget.
That's why I say yes, of course. Which of those firms has the best business model for this environment?
You know, I think, look, first of all, I like the wealth management business as a general business within financial services. I still think it's one of the best businesses in financial services.
So that favors Merrill and Morgan Stanley?
It favors anybody who is in the business and does it in a way that works for the advisors and the clients. I like the notion of a private firm and a private company model under a brand like Rockefeller. I think it brings distinct advantages. I think the financial advisor will be comfortable working with that within that environment. I think clients, particularly if they know the name like Rockefeller, they feel like when they come in that this is what it's all about. We're only going to provide advice to clients. We're not going to put capital to work. We're not going to do other things. We're not trying to compete with very large firms. We're trying to provide the best differentiated advice and intellectual capital to our clients.
I saved my Bitcoin question for the end. If you were running Goldman Sachs or Morgan Stanley or JP Morgan or Bank of America today, how seriously would you have to take trading and client service for Bitcoin and cryptocurrencies more generally?
I'll answer the specific question, but the broader topic is currency. And millennials are going to be different from a currency standpoint. My millennials sit there at a meal and they clear the bill with Venmo. My millennials don't really carry, and millennials don't carry a lot of cash. They don't write checks. So this whole space is changing dramatically. Because of that, you can't just look at this and say it's a bubble, it's not relevant. And
you can't write it off.
You can't just write it off. And also, blockchain is part of this, and blockchain is real. That's going to change a lot of the way businesses work across the landscape. Whether I get the question all the time, whether Bitcoin's a bubble, seems to me.
No, I'm not asking you
okay.
that. I'm asking you how seriously these bulge bracket firms need to take this as a tradable asset and potentially as an asset class of sorts.
They need to take seriously the change in the payment system model that's occurring right now. Millennials are going to function differently, and technology is allowing them to do that. So how people pay for things and clear transactions and use the payment system 10 and 20 and 30 years from now will be very different, Erik, from the world that we grew up in.